Hello everybody. Welcome to today's live stream. 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 Yeah, we're live. We're live. We're live. We're live. We're live. Yeah, we're live. So we started this live stream some weeks ago, and we've been, covering some topics. Last week we talked about candlesticks and market structure and key levels, right? So this week we're going to be taking things a step further. We're talking about candlesticks at key levels and reading price action. Candlesticks at key levels. We covered key levels in the last class, in the previous class. So today we're going to be talking about candlesticks at key levels. So let's wait for the numbers to come up a bit so that we get to move on to the business of today. So whilst you're waiting for the numbers to come up a bit, share this live on your WhatsApp status, your IG story, your Snap handle. Let people know that we're live. Let people know that we're live before we move on to what we have for today. So I'm coming. Let me just share mine so you to do the same. Share yours and let people know that we're live. We're live. We're live. Yeah, we're live. 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 Yeah, we're live. We're live. We're live. We're live. So make sure you share this, and let's come back and move on to the business of today. Let's come back and move on to the business of today. So make sure you share to your WhatsApp story, IG, and let's move on to the business of today. Make sure you share it. Make sure you share. All right. So last week we talked about market structure and support and resistance and psychological levels, basically key levels. That's what we talked about. So this week we're taking things a step forward. We're talking about candlesticks at key levels. So before I move on, I would love to know if you can hear me clearly. Drop number one in the chat box. If you can hear me clearly and you can see me clearly, drop number one in the chat box. If you can hear me clearly and you can see me clearly, drop number one in the chat box. Drop number one in the chat box. If you can hear me clearly and you can see me clearly, drop number one in the chat box. If you can hear me clearly and you can see me clearly, drop number one in the chat box. Drop number one in the chat box. So we move on to what we have for today. Drop number one in the chat box. If you can hear me clearly and you can see me clearly, drop number one in the chat box. Okay. I think the number is quite small, but over time people will join in. All right, let's move on to the business we have today. So what we have today, we're talking about candlesticks at key levels, right? Reading price action. So today will be more of, less of talk and more of me showing to you types of candlesticks and how they react on key levels, right? Today will be more of, showing practicals. So that's what today will be more. So before we move on, drop your locations in the chat box. Drop your locations in the chat box. Let me know where you're streaming me from. I'm currently at JRA Port Harcourt. Let me know where you're streaming me from. Let me know where you're streaming me from. Drop your locations in the chat box. Let me know where you're streaming me from. Let me know where you're streaming me from. Drop your location. Let me know where you're streaming me from. Okay. Let me know where you're streaming me from. Drop your locations in the chat box. Let me know where you're streaming me from. Okay, so first off, I want you guys to know, like I've always been saying, a candle in the middle of nowhere on the chart, it means nothing, right? It's just not. But a candle at key levels, like support and resistance, psychological level, has a lot of information to tell us. So that's what I want you guys to know. That's what I want you guys to know. So last week we talked about market structure that shows us the direction where the market is going, and then we talked about key levels that shows us the location, what's currently happening, where it's currently happening, where buyers are getting in or sellers are getting in, where people are actually getting into the market to make trading decisions. And today we're going to be talking about candlesticks, right? Candlesticks shows us, gives us confirmation. Candlestick gives us confirmation. So today we're going to be talking about candlesticks, right? So today we are going to be talking about candlesticks. Right. So drop your locations for those of you joining in now. Drop your locations in the chat box. Let me know where you're streaming me from. Let me know where you're streaming me from. Drop your locations. Let me know where you're streaming me from. Let me know where you're streaming me from. Also hit the thumbs up. Hit the thumbs up button. Hit the likes. Hit the likes. Drop your location. Let me know where you're streaming me from. Okay, PH City. PH City. Okay, let me know where you're streaming me from. Drop your locations. Check your locations. Let me know where you're streaming me from. Okay, Wiki Street from a precon. Okay, okay. Drop your locations. Drop your locations. All right. So we have more people joining in right now. We have more people joining in. So first off, what are we going to be talking about today? I'm not going to be explaining what candlesticks are because I've done that in the previous class. I'm just going to be going straight to the point today. I'm going to go straight to the point. So today we're going to be talking about core candlestick behaviors, core candlesticks behaviors, how they react on these, key levels. Okay, RGS the room of the Maya. All right. Yeah, candlesticks. We're talking about candlesticks. We're talking about candlesticks. So today we're going to be talking about core candlesticks behaviors. And now, first off, what we have for today are rejection candles. Rejection candles, right? And what are rejection candles? Rejection candles consist of small body and long wicks. Examples are the pin bar candles and the hammer candles. Now I'm going to show us exactly what I'm talking about, all these candles, so that you get to understand what I'm talking about. So, and then we also have momentum candles, right? Momentum candles consists of massive bodies. They are candles with big bodies and tiny wicks. I hope you guys remember what wicks are from the previous class. I explained what wicks is or what wicks is about. So examples of the momentum candles are, Marubuzu, and there are different momentum candles, and we'll be covering all of that today. There are different momentum candles. And the next candle we are going to be talking about, the next candlestick behavior is indecision candles, right? They have very small body or no body at all. They show uncertainties between bulls and the bears, or the buyers and the sellers, as the case may be. And examples of these candles is the doji candles, right? There are different types of candlesticks. Examples, there are different types of candlesticks. We're not going to be covering all today because there are so many. I'm just going to cover the very important ones that you need to know as traders. Yeah, so that is it. So first off, we're going to be talking about rejection candle. Right? Let me take us to the chart. Let me share my screen so that we get to see what I'm talking about. Let me share my screen. Let me share my screen. Oh, can you see? Sorry, I'm going to be sharing my screen. If you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. If you can see my screen, drop number 2 in the chat box. Drop number 2. Drop number 2. Drop number 2 if you can see my screen. Drop number 2 in the chat box. Drop number 2. Drop number two, so we move on. You can see my screen. Drop number two in the chat box. Drop number two. You can see my screen. Drop number two. Okay, two. All right, all right. Okay, my screen is being displayed. Okay, so first off, we're going to be talking about rejection candles. Now, what are rejection candles? Rejection, like I talked about previously in our previous class, right? Rejection candles are candles with long wicks and little bodies, right? And they show up at key levels. They show up at key levels. Now, what does it imply? Now, for example, in a downtrend, right? Like, okay, this is a downtrend. You can see this is a downtrend, a bearish trend. Gives us a lower low, lower high, lower low, lower high, and lower low. Now, since this gray zone is a key level, and you guys already know what key levels are, let me take away this session break so that chart gets to be clear. Now, key levels are where price has actually made noise before, right? That's what key levels are. Now, you can see when price approaches a key level, you either see rejections. We'll see rejection. Now, this rejection means since price has come here, right? Came here, it pushed up to this point, and then finally, whenever it comes back here, it's going to reject because more buyers will stepping in to push price upwards again. So now, if we go down to the smaller time frame, we'll see rejection candles. All right, now you can see this is a rejection candle. You can see the small body and the long wick. You can see another one right here. Small body. Let me zoom in so that we get to see it clearly. Small body, long wick. It's rejecting. It means sellers try pushing price down, but buyer steps in, and price and candle eventually closed right here. So that is what rejection candles are. You can see rejection candles. It means sellers are trying to force price down below this level, but buyers are refusing to push price down below. So that is what rejection candles are. Hope this makes sense. Hope this makes sense. Hope this makes sense. Right? Hope this makes sense. If it makes sense, drop number 3 in the chat box. If it makes sense, drop number 3 in the chat box. If it makes sense, drop number 3 in the chat box. Drop number 3 in the chat box. Drop number 3 in the chat box. If it makes sense, drop number 3 in the chat box. Okay, okay, number 3, number 3, number 3. So these are rejection candles. And the next candle we are going to be looking at is the momentum candles, right? The momentum candles. Now, the momentum candle consists of massive bodies, right? Tiny wicks or no wicks at all. But they have massive body. Now, let me take us to the chart so we get to see the momentum candle. Massive body. You can see this is a momentum candle. This big one right here. Now, what is this signaling? It's signaling step up and sellers push price downwards, and now buyers are stepping in to push price upwards. So that is what momentum signal. It signals a change in momentum of price. Means price has been downtrending. Now buyers are stepping in. So this shows momentum currently that buyers are stepping in. So it can also be vice versa too as well. For also a sell example. Also a sell example too as well. If you come here, you would see a momentum candle, right? You will see candlestick rejections. You can see this one is rejecting right here. This one is rejecting. This one also rejecting, followed by a momentum candle and private dropped. Like that, like that, like that. So that is how it is. That is how it is. And the next thing we're going to be talking about is indecision candles, right? We're going to be talking about indecision candles. Indecision candles. We're going to be talking about indecision candles. So indecision candles, like I said, they are candles with no body. They don't have a body, or sometimes they do have tiny bodies and tiny wicks or long wicks. So let's look for an indecision candle. Like this one right here, this one right here. This is an indecision candle. It's an indecision candle. This one too, as well. You can see it. Indecision, indecision, indecision means price is just stagnant. So it's also kind of ranging. Understand? That's what indecision candles are. You can see right here, small body indecision. Buyers are not actually pulling through, sellers are not pulling through. Everybody's just stagnant. So that is indecision candle. That is indecision candles. So the next thing we're going to be looking at are examples of candlesticks. So there are different examples of candlesticks, and there's an app I'll recommend for us. That app really helps me in the early stage of my trading career. Go on Play Store, you're going to see it, or in Apple App Store. It's called the Japanese Candlestick Packet. You see the different candlesticks, the ones I'm not able to cover right now. You're going to see all of them right there, and they're going to cover them for you in details, right? We're going to cover them for you in details. So the examples of candlesticks. First off, we're going to be looking at the Marubusu candlestick, the Marubusu, right? So I'm going to be showing us a picture of what the Marubusu candlestick looks like. I'm going to be showing us a picture of what the Marubusu candlestick looks like. I'm going to be showing us a picture. I'm going to be showing us a picture of what the candlestick looks like. Okay. So this is a Marubusu, right? This is the Marubusu candlestick. You can see it's a momentum candlestick, right? It has big body with no wicks at all, no wicks. Now, when you see this candle form, like on the key level, that means if price has been trending downwards and you see from at the key level, like a support or a resistance, as the case may be. So this one is this is the bullish Marubusu, right? This is the bullish Marubusu, and this is the bearish Marubusu. So now the bullish Marubusu forms at the bottom of a downtrend, right? At the bottom of the downtrend, that's when you see bullish Marubusu. That's where it forms. It means sellers has pushed price downward and buyers are stepping in with momentum to take price upwards. So that is the bullish Marubusu, and vice versa for the bearish Marubusu as well. It means buyers has pushed price upwards and sellers stepping in to push price downwards. So that is it for Marubusu candle. That is it for the Marubusu candle. That is it. And the next candle we are going to be looking at is the engulfing candlestick. The engulfing candlestick. Right? Let me show us the engulfing candlestick. So this is the engulfing candlestick, right? This is the engulfing candlestick. This is bullish engulfing pattern and the bearish engulfing pattern. Now this one also forms at the bottom of the downtrend. So the bullish candlestick patterns, they form at the bottom of the downtrend. What are they signaling? They're signaling reversal in price. That sellers has pushed price. It's time for buyers to step in and push price upwards. So now you can see now the bullish engulfing. Now the name engulfing means it's engulfing this other candle, this bearish candle right here. Momentum of the bullish candle is engulfing this bearish candle right here. Means it's closing above it. It's opening slightly above it, slightly above the opening of this previous bearish candle. Now, like I said, bearish candle, the bottom right here is the open, the top right here, no, the bottom right here is the close, the top right here is the open. So it opened right here and dropped, eventually closed below right here. And then the bullish candle opened at this bottom and went up in value and closed right here. So that is the bullish engulfing pattern. Same thing applies for the bearish engulfing pattern. See a red body completely covers the green candle. That is it. That is it. The same thing applies. Appears at the top or at the ending of an uptrend at the key level, at the key resistance level. That's where you see this pattern, and then you know that okay, market trend is changing. Sellers are ready to push price downwards. So that is it. That is it. That is it. That is it. So the next candlestick pattern we're going to be talking about is the pin bar candlestick. Pin bar candlestick. Pin bar. Pin bar. Next candlestick we're going to be talking about is the pin bar. I'm sure what the pin bar looks like. That's what the pin bar looks like. Okay, you guys can see right here. Pin bar. Okay, so this is a bullish pin bar. this is a bearish pin bar. Bullish pin bar, you always all this bullish candle, yeah, like I said, candlesticks alone in middle of nowhere means nothing. But candlesticks at key levels actually means a lot. It actually means a lot. Now, this is the bullish pin bar, right? It means sellers try pushing price downward, but buyers are stepping in, and price eventually close this way. So this is the bullish pin bar. And then the bearish pin bar also indicates buyers try pushing price upwards, but sellers faded the price and closed the candle right here. So that is it. They all signal reversals, right? They all signal reversals individually. They all signal reversals. And then another candle I would love us to look at is the doji candle. Doji candle is another candle I would love us to look at. The doji candle. Excuse me. The doji candle. Where is it? Okay. The doji candle. Okay, I think file is not here. And because line so we get to see the doji candle. Let me hold on. Doji candlestick. And take us online so that we get to see the doji candlesticks. Oh boy. Let me share my screen so that we get to see what I'm talking about. Let me share my screen so we get to see what I'm talking about. Okay, so yeah, okay. So now this is the doji candle, right? Wait, I think I searched for it. It's right here. Yep. So this is the doji candlestick. Let me should take us to images so that we get to see it clearly. Let me see if it's gonna zoom in. Now where it's opening. Okay, these are doji candlesticks. You can see there are different types of doji sticks, and all of them they signal indecision, right? This is the common doji, the long leg doji, the dragonfly doji. I think this one is called the four price, but you barely see this one on the chart. This one is called the gravestone. So we are going to go on the chart and we're going to be looking for the different doji candlesticks. Right, this one looks like a pin bar, but the body is very, very slight, very, very tiny than a pin bar. It looks like a pin bar, but right. So let's head to the charts. Let's head to the charts. So I get to shorts on the charts. Right? So I get to shorts on the charts. So currently, let's go to the chart. Let's see. Let's look for doji candlesticks. So let's look for doji. Let's see if we're going to find doji at key levels, or even if we don't see that key levels. I'm just show us what the doji looks like. Let me see. Okay, currently, I don't know if you can see a doji. This is a doji. This is a doji. This is a doji. I think this is the common doji, right? Common doji we saw. Then this is a gravestone doji. This is a gravestone. This one right here, and this one is the long leg doji. You can see they're all signaling indecision. Now, what is since I'm on the 1 hour time frame, right? Now, it's signal in every candlestick you're seeing here represents 1 hour, right? So in 1 hour, everything in the space of 1 hour, was indecisive, right? That's what this candle represents. And then this one also indecisive, and then buyers kind of stepped in, momentum, buyers push price upwards. You can see the aggressive momentum. You can see how big the candles were. All these at key levels, right? At key levels, and then you can see this is a Marubuzu candle. Okay, it's not. It has. This is just an engulfing candle. This is an engulfing candle. This that is an engulfing candle right there, right here, because it's engulfing this smaller candle right here, this bearish candle. So and then after the engulfing candle formed, what did we see? An explosive push up in price. You can see. So this is a momentum candle. It showed that price has been, has been consolidating on this key level. Sellers are trying to push price downwards. Buyers refused, and buyers started stepping in with momentum, and you can see this tells a lot. That's why I say candlesticks at random places means nothing, but candlesticks at key levels tells us everything. Now you can see after this momentum candle, you can see the explosive moving price upwards. Price trended upwards for a very long while. You can see pushed up, trended upwards for a very long while before reversing. So let's check for another momentum candle on the sell side of things. Sell side of things. Okay, you can see this is a bearish engulfing candle. You can see it's engulfed this other candle, and you can see what happened next. Price dumped. Price dumped. So that is it. That is it. That is it. Now this is a rejection candle. You can see price rejected, pushed up. That's just how it is at key levels. Rejection candles. So they don't just happen random places, they happen at key levels, right? Candlesticks are much more appreciated at key levels. So you don't just look at them from anywhere. Wherever it's forming, it's none of your business unless it's on a key level, right? So now what I'm currently looking at is next week or by tomorrow, rather, when the market opens, price will busting upward because now you can see momentum candle right here and rejection. So whenever market opens, price is going to shoot up. So that is just because buyers are willing to buy more at this price because price has trended for a while. That's got to the key level. Buyers are stepping in, and price will soon, making lower, higher highs, higher lows, and so on and so forth. So that's just how it is. So that's just how it is. So that's just how it is. Now, next we're going to be talking about is chart patterns, right? We're going to be talking about chart patterns. We're going to be talking about chart patterns. Now, what is chart patterns? Chart pattern is a collection of candlesticks to form a structure that shows repeatedly how market participants behave over time. So that is chart patterns. So there are different types of chart patterns. We have different examples of chart patterns, but like I said, I don't use everything. One thing about trading is keeping it simple. Simplicity is more. So we have the different examples of chart patterns, and we have the double top. This is my most favorite chart pattern because it keeps occurring times and times and times down numbers on the chart, and this pattern has made me so much money. Most of the trades I call in the Telegram channel, I I always see this chart pattern before I call out that trade. So there are different examples of chart patterns. Then we have the head and shoulder, we have flag pattern, but I don't use all this. I only focus on the double bottom and the double top. These are the ones we're going to be focusing on. These are the chart pattern we're going to be focusing on because this is the one I really focus on, right? So now the double bottom chart pattern. Now the double bottom, like the name implies, let me show us what it looks like. The chart, right? Now double bottom is like this. Price drops, gives us a first bottom, goes up, drops again, gives us a second bottom, goes up. Now, what is this signaling? If I see this pattern on a key level like this, what this pattern is telling me, what this chart pattern is telling me is that price will soon be heading upwards to the upside. Same thing applies for the double top, right? It goes up, gives us a top, comes down, goes up again, gives us another top, comes down. So the tops, it might not be perfect. So I actually call it a W pattern. This is the W pattern or the M pattern. So this is what because this looks very much like an M, looks very much like a W. So it might not be equal. Sometimes it might be like it might not be a perfect W. Sometimes it might sit like this, one longer, and then it continues upwards. That's how it is. And same thing applies. It might be like this, drops, goes up again. Still very looks like an M. And so what is signaling at the key level is telling us that price will soon be dropping. Now let me give us a live example on the trade I took. Now can you see? Can you see guys? Price drops, give us a bottom, pushed up, give us another bottom, closed up. Now that's how I got into this trade. You can see that's how I got into this trade right here. And price pushed up, though it didn't continue till it got to take profit, it reversed. So that's how I got in on this trade because it occurred at the key level and I saw it and I took on the trade. I executed because it's one of my favorite chart pattern, the double bottom. Like, you can look at this one. It's not perfectly a W. You can see this leg is longer than this first leg right here. So this is when you want to be getting in. On the second leg of the W pattern, goes like this, comes down. On the second leg of it, that's when you want to be getting it. Same thing applies for the M pattern. I think I took a trade recently on BTC. Okay, yes, you can see. You can see this was when I take trade. This was on Thursday on BTC for a sell. You can see the M pattern right here. At the moment, price broke down, gave me formed the M pattern completely, and then I knew it was time for a sell. And you can see how price smashed down OTP. Very simple at the key level because this is a key level because price has hesitated here. It's hesitated here, dropped, hesitated here, dropped, and now came back here, gave him a classic double top or M pattern. And seeing that, I know okay, this was likely to happen next. Price is gonna dump, and exactly that's what happened. Price dumped. So that was what happened. So that's how I get to spot these opportunities using these patterns, the double bottom and the double top. That's how I get to spot these opportunities. So now the head and shoulder pattern, you're going to be looking at that next. The head and shoulder pattern. I basically don't use it, but I guess it's best to know what the head and shoulder pattern is. So the head and shoulder pattern, let me stay in dream mode. It's like this, keeps your pushes up, gives your head, drops, drops, drops. So now what is this signal? Now this is the first shoulder, this is the head, and this is the shoulder, right? This is the first head, this is the first shoulder, the head, and the second shoulder. Now, what is this signal? It's signaling a drop in price at the key level. At the key level. So if this were to be a key level and this happened, if this were to be a key level and this happened, rejected here, drop, pushed up, drop, pushed up, dropped again. Now, this is the best time to get in. This is the best time. The moment price breaks this, this shoulder right here, breaks it below. This is the best time. This is the best time. Like I did here. I waited and take away this drawing. So you can see I waited for price to take away this, to take out this, waited for price to take out the neck right here. And then price took it out. It's a momentum candle. You can see right here. It's a momentum candle. You can see rejected here, closed aggressively, and I knew that okay, this M pattern is very valid and price will be dumping pretty soon. And I got in, and you can see how price dumped. So that is just it. So the moment, even on W pattern, so as well, you see W pattern on the key level. The first attempt is not going to break this, high right here. It drops again. It might come below it, close back inside, or not, or not. It might just be like this, and then finally, the moment it takes out this neck right here, the moment it takes out this neck right here, this is when you want to be getting it. This is when you want to be getting it right here. The moment it has taken out the neck, price has taken out the neck. Your stop loss, and That's it. That's how you get in the industry. At key levels, right? Like I told you guys, it doesn't matter where it happens. Only at key levels, that's when we're supposed to be respecting it. Okay, now this is a key level. If you look at it properly, now this is a key level because price has stated here, and you can see the W pattern right here. You can see it. Came back, it dropped. See, it's not perfectly W, but it looks very much like a W right here. Took it out. The moment you took it out, this is when you should be getting in on your trades. This is when you should be getting in stop loss. Look here, right? And we have made some money. We have made some money. Same thing here. So I told you this pattern it keeps forming at key levels. It always forms. Takes it out. This went to going. Sorry. This went to getting. This is a key level. Just getting stop loss below this other pattern. And just like that, you can see it always forms. Like I said, it always forms. It always forms. Go back in the past, so you see it always keeps forming at key levels. Now, this is another key level. It's another key level, right? Since this is a key level, what can we see right here? You can see an M pattern, right? M pattern. And what happened next after the M pattern? Your stop loss right above, the key level, and drop price. You can see price that yes, give us 1:2 is the reward ratio. You can see so that's the after key level price dumps. After key level price dumps. After key level price always dump. So that is it. 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 I hope this makes sense. This makes sense. Yeah, very beautiful trade on Thursday. Very beautiful trade on Thursday. So if you're not part of my Telegram community, let me drop the link right here. Let me drop the link so that you can be a part of the Telegram community as well. Let me drop the link so you can be a part of the Telegram community. So here is the link. Here is the link. So that click on the link below. So you get to join in and get to take trades with me together day in, day out, every day, every day. Every trade I take, I always shop it there. So for those of you who don't know how to trade, we always make money, right? We always make money from my trades until you know how to place these trades yourself. So click the link and be part of the Telegram, be part of the Telegram, be part of the Telegram. So the link will be in the comments after the video. I'll pin it there so that you get to join Telegram community and get to take trades together. And the next candlestick we're going to be looking at, okay, let's look for a head and shoulder on the charts. Talk about head and shoulder. Let's see if we get to see a head and shoulder on the charts, the key level. Let's see. Okay, you can see. I think this is a beautiful head and shoulder. Right here, drop, head and shoulder. Sorry, let me try it properly. You can see first shoulder dropped, head dropped, second shoulder dropped, and you can see and what happened next, price dumps. So that is it. That is it. And we also have a reverse head and shoulder too as well for the bullish side of things. Does this like this, like this, like this, like this. Now this happens at a resistance level. Whenever I see this, you know what's likely to come next is price pushing upwards. So that is it. So now, okay, let's look for bullish, a reverse head and shoulder. A reverse head and shoulder. Let's see if you're going to find any where it looks like. So all these are just examples of chart patterns that plays out It actually tells us how traders behave, right? At key levels, and what's likely going to happen next. So it's not like it always plays out exactly the way I showed us on the chart, but most of the times that's exactly how it plays out. That is exactly how it plays out. Sometimes it might not play out exactly. You might see a W pattern at the key resistance level and gets on a trade and hits your stop loss and reverses. You might be like, oh, why is it not working? Traders don't think the same way every time, but most of the times that's what happens when you spot these patterns. That is what happens when you spot this pattern. So you should do your own due diligence. Make sure you have your charts, you're marking your key levels, you're looking out for the chart patterns, forming around those key levels, and you're recognizing them. And also make sure you download the Japanese candlestick patterns on Play Store so you get to, okay, I'm not seeing anymore. Let me go to JPY. Let me go to another pair. Let me go to another pair. Let's see, okay. Let me go to another pair. Let me see if I'll see a reverse head and shoulder. Let's see. Hmm. Let me see. Let me see. Let me see. Those will always form all the time. This is the head and shoulder. You can see head, shoulder, boom. That's how it is. Right. For someone who could catch this move, maybe could be selling at somewhere here, put a stop loss somewhere around here, and then getting a trade. That's it. Now, is that a key level? Obviously, it is a key level. So these forms are key levels. Now, why did I call it a key level? Let me show you guys. You can see if you extend it from here, you can see that price rejected upon this key level, bust up, broke it, use it as now it flips the zone. It flips this key, this support zone. This was once the support pushed up, came and pushed up. The moment price broke it, it flipped from support to resistance. I talked about it in the last class. It flips it from support to resistance. You see, now give us an M pattern dumped. So that's why when price came back here, we formed a very beautiful head and shoulder pattern. You can see, and then dumped. So that is just it. That's how. So all these are just traders, thinking the same way over and over again, the same way traders behave, right? So it doesn't happen, but most of the times it's what's likely to happen, right? Because trading is filled with variance. And when I mean variance, filled with uncertainties, right? Okay, I think, let me see, does this look like a reverse head and shoulder? Let me see. See, no, I don't think. See, head. Mm-mm. Mm-mm. Okay. Mm-mm. Maybe if we go down to 1 hour time frame, maybe if we go down to a bigger time frame, it might look like it's. Let's go down to a bigger time frame, like 1 hour. Let's see what it looks like. But like I said, time frames are the same candlestick telling us same story but different representations of it. Right? Tells the same story, different representation of it. Let's see. Let's see. Is it the reverse head and shoulder? Mm, for me, this looks more like a W pattern. Right? And then, okay, this looks more like shoulder, head, shoulder, continuation. Can you see? But inside head and shoulder pattern, we always see like W patterns, mini W patterns inside the head and shoulder pattern. Right? So we can see this is a W pattern. If I was live here, I would have, so if this was actually correct, I was actually seeing this live and I'm looking of taking a trade. I've taken this trade right here. My stop loss below. Target 1 is to 2 weeks the reward. You can see which reward ratio 1 is to 2. and then leave it to play out, and you can see that he take profit. So that's just how it is. At key levels, whenever you see these patterns at key levels, they are you always have your high win rate. It has high probability of actually playing out, actually playing out, actually playing out. You can see this is also a double pattern. Okay, I think this is a reverse head and shoulder. You can see right here, shoulder, head, shoulder, continuation. But this, I think this happened on a Sunday. Okay, this was on Friday, and then this gap you're seeing here is because whenever the market opens for a new trading week, you always see gaps in price. Price will not continue smoothly, it's just gap. So that's how it is. So this was on Friday, from this head and shoulder. And Monday, you can see what happened next. So that's just how it is. So candlestick tells us a story, what traders are doing currently. So this gives us that traders are buying currently. So what do? You join them to buy, join the banks to buy, and enjoy the move, make money. That is it. So, like I said, market structure gives us direction, right? Key level gives us location, and candlestick there gives us confirmation. So that will be all for today. I think that will be all for today. That will be all for today. And there are different candlestick patterns. There's flat pattern, there's falling wedge, rising wedge. There are different candlesticks pattern, but I don't pay attention to those. I only pay attention to the one that actually concerns my trading strategy and my trading system, and that is the one I suggest to pay attention to because trading is more about simplicity, right? Keeping things simple. The simpler it is, the better and the more money you make for yourself. So that is how it is. You don't have to complicate yourself like learning everything. You should just know them for knowing sake. But the ones you should be paying attention to, or the ones you should be watching closely for are or is the double bottom or the double top and head and shoulders and reverse head and shoulder. Reverse head and shoulder. Reverse head and shoulder. Just head and shoulder. That's what you should be paying attention to. That's what you should be paying attention to. So that will be all. So if you have any questions, I would love to take your questions for today. Have any questions? I would love to take your questions. Before we do a little example, let me see if we could do a little example. If you have any questions, just drop your questions. Let's go to another. Okay, let me go to chat that I've not used before. Let's say NCD. Okay, NCD. USD. I don't trade this pair. I don't. So it's just there. I don't trade this pair. So what are we looking for? Let's just look for key levels. Let me show you also how to mark key levels. Right. Mm, okay. So now, first of marking your key levels, what you should do, you should come to the higher time frame. As a day trader, you should be marking from daily time frame, right? You should zoom out, come to the daily time frame, look at where price is stated previously. With your eyes, you will see it. Currently, looking at this chart, you know where price is executed. You can see right here. You can draw it. Now, you can see support and resistance, right? They are treated as a general area. That's why you can see some at this point price overlapping, at this other point overlapping. Here it touched perfectly, here perfectly overlapped. So what price currently doing? All these are just liquidity being swept. In more advanced class, when as we advance, we talk about what liquidity are, what liquidity is, and why all these overlaps happen, and we say reclaim, overlap, reclaim. So support and resistance is treated as a general area. So and me, I don't like drawing my support and resistance on my key level zones as big as this because it makes my charts look messy to me. But you can actually draw it bigger. But me, like this is just fine. I get to grasp the information it's telling me and understand perfectly. So if you extend it backwards, you can see price has rejected there. you extend it backwards, if you keep extending, price might has rejected it. So support and resistance are treated as a general area, not just a line or a crazy. See, as in rejected, rejected, rejected. So that's just how it is. So some part you can see some part are not even touching it, just reverse. That's it. That is it. So now, as a trader, now what you do, you don't really need to concern yourself with what has really happened in the past. Like a few months data from here, okay, I think this is January, okay, February, this is February, from here is February down to this point is October. So you don't really need to concern yourself backwards in time. What you just need to do is just the recent data you can see, and you can see the price has been trending downwards, downwards, downwards. Now, you look at the key levels, mark your key level. What do you do? Go down to the 4-hour time frame. You can see the moment price came here, give us a double pattern on the daily time frame. You see, double pattern, pushed up. They're giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and to continue giving us higher highs. So that is it. Now, since you know that price is at the key level and it's trending upwards, right? What else do we do? Mark it, go down to the 1 hour time frame. 1 hour time frame is where I pay my, 1 hour time frame is where I spend most of my time. I see another station here, like that, like that, like that. What do I do? I draw another key level. Okay, so I draw another key level. Now, what am I watching out for? Now, what I'm watching out for is for price to actually break this key level. Once it breaks this key level, I'm going to be buying three price upwards. Going to price breaks it, breaks above it, gives me my W pattern. I'm going to be buying. That is it, as simple as that. So that's how to mark your key levels. Step by step, start from daily for a day trader and then go on like that, like that, like that, like that, like that. So since I guess there's no questions, So I guess that would be the end of today's class. And I hope to see you guys same time next week. Same time next week. And bye. Now always remember today is a new day to become a better you. So always trade smart. And I'm gonna see you guys next week. Make sure you hit thumbs up and you share this video to as many people as possible. And all right, I'm gonna see you guys next week.